Good day, everyone. Welcome to today's market fundamental and technical breakdown. My name is Anthony Phillips Njoku, and I'm the founder of 10x Digital Lane, where everyone who has a knowledge gap in digital trading can get the right knowledge, get the right guidance, and also get the right tools to enable them trade the financial market profitably. So today's market fundamental and technical breakdown is for the time period of 17th of March to the 21st of March. We'll be diving into four pairs, which is Euro USD, AUD USD, gold, and Bitcoin. How it goes down is that we will talk about the technical chart first. After we talk about the technical chart, we will dive into the fundamental analysis. The fundamental analysis has to do with the geopolitical news events. It has to do with employment data, inflation data, interest rate data that will be announced within this time period. And all these have a driving factor in every single pair we'll be discussing today. So if this is your first time, watch to the end because we'll be offering some opportunities to you, more like discount opportunities, freebies, and also giveaways. And then if this is not your first time, thank you so much for coming back. Don't forget to smash the like button, subscribe, and share this content with your friends and family. So with that said, I'll jump over to my screen right now, and then we'll be able to start the analysis proper. Okay, so right now we are on my chart on Euro USD. We are on my chart on Euro USD. So how this goes down is that first of all, we'll show you guys what we are anticipated for last week. Okay, so for Euro USD, we anticipated that the market would come into this supply zone where the market is currently and drop. It's coming to the supply zone where the market is and drop. And if you can see, based on last week, this was the drop we got from that supply zone. Okay, this was the drop. So our last week forecast was quite accurate for Euro USD. Now let us update this chart. We update the chart by starting from the weekly time frame. Then we adjust last week. This is the previous week high. We take it to this new week high. Over here. And this is the previous week low over here. Good. So after that, we go to the daily time frame. On daily time frame, we spot out the daily demand and supply zones. So already the daily supply zone has been spotted for us. This is the daily supply zone. And then this is the daily demand zone. This is the primary daily demand zone. Okay. We have a secondary daily demand zone over here. And then we spot out the prevailing trend. This is the prevailing trend on the daily time frame. It's an uptrend, impulse, correction, impulse, correction, impulse. So we're expecting a correction for another impulse. So the correction we're expecting is going to come towards this 50/62% Fibonacci retracement. Once the market comes back here, we're expecting what an impulse move again. So with that said, we go down to the 4 hours time frame. On the 4 hours time frame, we spot out the 4 hours demand and supply zone. So currently, this is the 4 hours demand zone over here. And then this is 4 hours supply zone over here. So my forecast for Euro USD this week is a continuation forecast for last week, right? This was an impulsive move for Euro USD. So we expect what a little corrective structure for another impulsive move down towards this level. This is what I see for Euro USD. The next on the list is AUD USD. So for AUD USD, this was our forecast for last week. We told you guys that we had a supply zone over here on AUD USD on 4 hours time frame. And this was where the market was. So we told you that when the market goes back into the supply zone on AUD USD, we should expect a drop. And exactly this is what the market did. On Monday, the market tapped into the supply zone and dropped. We went back into it on Thursday again and dropped. And now the market is back into the supply zone this Monday, which we can also anticipate what another drop towards this demand zone. This is the primary demand zone we want the market to drop towards. Okay, so this current structure is still valid. So let us update this current chart right now. So on the weekly time frame, we mark out the previous week high and previous week low. This is the previous week high. And this is the previous week low. Then we go to the daily time frame. On daily time frame, we mark out the daily demand and daily supply zone. So on daily time frame, this is the daily supply zone, the last blue candle over here. Okay. And then this is the daily demand zone. Then we mark out the prevailing trend. So on the daily time frame, the prevailing trend we can see is also what? A downtrend. On the daily time frame, the prevailing trend you can see is on a downtrend. Okay. This is the impulse, correction. You can expand that impulse. Then we go to the words, the 4 hours time frame. On the 4 hours time frame, mark out 4 hours supply and demand zone. So the last week for supply and demand zone still holds. It still holds. But I'll have to update the supply zone a bit. Why I have to update the supply zone a bit is because when the market came back into the supply zone, it broke this low. Once this low is broken, liquidity has been taken. So the current supply zone I'll be marking out, it will be this blue candle over here. If the market hasn't broken it yet, the market has taken that supply. Good. So I think we use the other primary supply zone. So for me now, our forecast still holds. Okay. Once the market, for me now, the market should head towards the demand zone over here. Then the next on the list, gold. So for gold, our forecast for last week was, this was our forecast for last week. Gold was at this level. So if gold comes back towards the demand zone, we should have a massive buy towards the supply zone. Or if gold should break this high over here, which it did on Wednesday, we should expect what? Another massive push to the upside. And that's exactly what gold did. So gold had a little push to the downside, but it did not come towards our demand zone and then pushed up massively. And when gold broke this high, okay, on Wednesday, it had a little retest with this candle and then continue pushing to the upside. So now let's update gold. We start from the weekly time frame. They will mark out the previous week high and previous week low. Okay, then we'll go to the daily time frame. Then we'll update the daily demand and daily supply zone. So over here, this is now the new daily supply demand zone. Okay, which will be updated. But we don't currently have a daily supply zone yet because the market created an all-time high. Okay, so we're using this optimization zone instead. This is a optimization zone. Then like I said, we don't have any daily, but I can use this double, there's a double top formation here. So let me go to let me still replace this because this is a significant zone. I'll replace it and add good. Why I did that is because the market could choose to just come back, retest this and continue pushing to the upside. Then I go down to the 4 hours time frame. So on the 4 hours time frame, I need to update the 4 hours demand zone. So the 4 hours demand zone should be here. This is a optimization zone. Then the 4 hour supply zone should be this huge candle over here. Which the market can still break due to the uncertainty of the tariffs. So we're currently inside a supply zone. So from here now, we can anticipate what a drop for gold towards the demand zone. or reoptimization zone. So that's what I see for XAUUSD. Then the next is Bitcoin. So for Bitcoin, the chart is already updated and I already called out the signals. If you're following us on our channel, on WhatsApp, on Snapchat, and on Telegram, the link is going to be on the description below here, okay? Just go to the link tree. Once you click on the link tree, this is the link tree. It will bring out this bunch of links for you. So you just have to scroll down and go and follow us. Follow us on our WhatsApp free group, our TikTok, our Facebook community, our Instagram page, our Twitter, our LinkedIn, and our Telegram. Also, this Forex Made Easy Telegram group. That's where we drop updates. Okay. So Bitcoin has already been analyzed and updated. Okay. So for Bitcoin, we already called out a signal on Bitcoin. Okay. And this was a signal. We called it out live, and everyone in our community joined and they took the trade. So what are you missing out on? Stop missing out on this wonderful opportunity. So let me recall what I analyzed. So for Bitcoin, we have a bearish bias. Meanwhile, there is a fund called the Hyperliquid Fund. Okay, they have a sell position on Bitcoin futures. Okay, their liquidation price is above here. They have $371 million liquidation at this point. Okay, so once the market gets there, their money will be liquidated, 371 million, but they are on short positions. Meanwhile, we have a bearish bias. The bearish bias is that the Europe Central Bank, they are not happy with US taking Bitcoin as their major reserve currency. And also, we have the whole issue of tariffs going on. Okay, the whole issue of tariffs going on is causing some uncertainty in the market, which is also making what Bitcoin to move to the downside as well. Meanwhile, for the bullish sentiment, if the market decides to go up here and take this liquidity from the micro hyper liquid fund, okay, we are going to have bullish sentiment setting, okay. And if that bullish sentiment setting, what will support it is the fact that El Salvador, one of the states in the United States of America, which have made Bitcoin their main reserve currency, they are buying more Bitcoin. They bought around 42 Bitcoins this past week, okay? And they are growing their holdings. So those bullish sentiments could drive the market to move to the upside. And there's another state that fight for them for their own reserve currency to be Bitcoin this past weekend, okay? Utah is a state in the United States of America. So, but the filing has passed Senate, so that could be a bullish sentiment as well that could push the market up. And if you push the market up, we're expecting Bitcoin to head to 91,000 per Bitcoin. But if the market insists on dropping, we should expect Bitcoin to touch at least 80,000 first. But if it breaks 80,000, then we should go lower to 76,000. So that's what I think for BTC USDT. So with that said, if you're interested to learn how to trade, you just click on the link tree. Once you click on the link tree, you can see our store over here. This is our store on seller.co. I told you guys, I promised you guys a giveaway, okay? So for you guys that are new to my channel, you can go and click on that store right now and go and claim these two books for free. How to make 6 figures in 6 months without owning a property on Airbnb, and how to become a passive income machine. This is going to show you how you can trade the financial market passively and earn money passively. Then if you want to join my VIP Signal group, whereby we'll be having daily analysis on London session with my team, you can join by paying this sum of money, okay? This is the VIP Signal group. Once you're done with the payment, the link will be provided for you, and then you can click to join the VIP Signal group. You'll be treated like royalty. We'll hold your hands, guide you with risk management, guide you with placing the trade, and be able to make profits from the financial market. Then if you come over here, we have our course. If you want to learn our basic strategy and also the professional strategy, you can come over here. We have the 1 month package, the 3 months package, the 6 months package, and the 1 year package. Whichever one you choose, you just make payment for it and you gain access to the package instantly, and you'll be able to start learning the materials. Then if you want to get our book, Forex Mastery, A Guide to Trading Success, written by me, which is going to give you the basic foundation, the basic intellect, and also the basic psychology to be able to trade the financial market profitably. You can go and click on this link and make payment for this course, for this book. Once you make payment for this book, you'll be able to gain access to the material and be able to download the PDF and study the material. So with that being said, If you're not comfortable buying on our store, you can go to our website. We have a website, www.10xdigitallane.com. Once you click on your Google or you click on your Safari or Firefox, it will open up this website for you. And on our website, you'll be able to see the prices again. Like I told you guys, we have the 1 month package, 3 months package, 6 months package, and the 1 year package. These are the prices. And over here, this is our team, those who are working with us to be able to make this company stand and be successful. These are some of the platforms we have partnered with. We offer few of them offer affiliate partnership with them, and few of them we don't. So the thing there is that if you're able to just come over on this website and go through the content here, you'll be very marveled. We have a presentation about our business plan over here on the top right corner. This one currently loading. Then down here, we have a lot of testimonies from our students who have joined us. Like for instance, Aneke, Nneka Naman says, knowing and having you as a mentor is the best thing that has happened to me. Okay, and then she's here in Nigeria. I've met her face to face. And over here, this is Miss Ebere from Angola. She says, good day, Mr. Njokoma Kochku. Thanks very much for this advert you did on your WhatsApp status that made me to join and know how to trade and make double of my money on my coin. I thought it was a joke. Oh. It's good to follow advice of someone that know what he is doing on coin. I will tell all my friends about this to join and make double of their coin. Thanks very much. I appreciate it because she trusted the process. I was introduced to her by her friend there in Nigeria. She was in Angola. She had issues with her wallet, and I helped her solve that issue. Then she joined my academy and learned all our materials. Right now, she's happy. She's making double of her money on coin, and then she's making progress. That's my passion, leadership and financial freedom. So what makes me happy is to see the transformation in the lives of the people in the world when they become less bothered about money and live the life that they love. So right now, let us dive into the next segment, the fundamental analysis. For the fundamental analysis, we start the week Monday, March 17, 2025. And then we don't have any London session news, but we have New York session news starting by 1:30 p.m. West African time. That's to do with retail sales, ex gas and slash auto. Then retail sales month over month, retail sales ex auto month over month, retail sales year over year, retail sales control group month over month, and then the New York Empire State Manufacturing Index. Out of all these, the highest impact is going to come from the control group month over month, which means that retail sales has to do with the total sales of goods and services, okay, by companies. And what makes retail sales rise, it has to do with consumer sentiment. You understand? Once consumers have money and they can be able to spend, then retail stores will be able to receive this fund, and then the retail sales will drive up. So in this case, the sentiment of employment, labor market in the US has been strong. And also the consumer sentiment has been positive, okay? But the only uncertainty you have has to do with the whole tariff war, which has been imposed by different countries for products that is currently being used in the United States of America. But without that, over here, we see that the previous figure is minus 0.5%. They're expecting to 0.2. If this happens, the dollar should be very strong. The same thing with retail sales month over month. We have minus 0.79% and we have 0.7%. If we get a figure higher than 0.7%, it is good for dollar. If you get a figure lower than 0.7%, it is bad for dollar. The same thing with the control group. If you get a figure higher than 0.3%, it is good for dollar. If you get a figure lower than 0.3%, it is bad for dollar. And manufacturing index, you get a figure higher than minus 1.9%, it is good for dollar. But if you get a figure lower than minus 1.9%, it is bad for the dollar. Then on Tuesday, London session, we have the economic sentiment. It has to do with those living in Germany. Okay, are they optimistic that the economy is improving? Are they pessimistic that the economy is dying? So over here, we have a previous figure of 26. If you have and then they are expecting to be 35. If you get a figure higher than 35, it is good for the dollar. If you get a figure lower than 30, sorry, for the euro. If you get a figure lower than 35, it is bad for the euro. Then for New York session, we have inflation rate year over year for Canada, and then we have CPI medium year over year, CPI teen mean year over. These are derivatives. The most important one is the inflation rate year over year for Canada. So over here, the previous figure is 1.9%, and they're expecting to be 2.1%. Remember, the target of the Central Bank of Canada is to bring down inflation below 2%. So I think this figure is going to be negative and below 2.1%. If that happens, Canada should be weak against every other currency. Then housing starts has to do with houses that are currently being constructed in the United States of America. Why building permits has to do with filings of permits that has been sent to the government that they want to start a project. So a housing start has to do with they have already started building, which means it's going to provide homes for people, offices for businesses, and so on and so forth. So over here now, the figure is 1.37 million, okay, 75 million, which is higher than 1.366 million, okay. If we get a figure higher than 1.375 million, it is good for dollar. If we get a figure lower than 1.375 million, it is bad for dollar. Then building permit is the same thing. If you get a figure higher than 1.45 million, it is good for dollar. If you get a figure lower than 1.45 million, it is bad for the dollar. Then on Wednesday, we have early in the morning by Asia session, balance of trade, which has to do with import minus export for Japanese to be precise. Then by 4 a.m., we have interest rates decision for Japan as well. So if the balance of trade turns out to be higher exports than imports, it is called a surplus. But if it is higher imports than export, it is a deficit. But Japan is known as the central of trade, so we expect a surplus. So a figure higher than 722.8 billion yen should give Japanese yen strength, but a figure lower than it should give Japanese yen weakness. Then the same thing for the interest rate there, it is 0.5%, 0.5%. If it is left unchanged, Japanese yen should be strong, but if it is cut, Japanese yen should be weak. Then by 11 a.m. London session, we have CPI for Euro Central, just do it inflation. A higher figure than 127.32 should give Euro strength. A lower figure than 127.32 should give Euro weakness. Then for the New York session, we have the Fed interest rate decision this same week on Wednesday. If the interest rate is left unchanged at 4.5%, it will give dollar strength, but if the interest rate should be cut, it should give dollar weakness. Then on Thursday, we have Asian session, we have employment changes for AUD and unemployment rate for AUD. So for the unemployment rate, if you see a figure higher than 4.1%, it should give AUD weakness. But if you see a figure lower than 4.1%, it should give AUD strength. Then early in the morning London session on Thursday, we have unemployment rate for Great Britain pound. If you see a figure higher than 4.5%, it is bad for Great Britain pound. It should give Great Britain pound weakness. But if you see a figure lower than 4.5%, it should give Great Britain pound some strength. Then exactly on Thursday as well, we have interest rate decision for CHF, which has been with Swiss franc. And then if the interest rate is cut, like you see here, 0.25%, it should give Swiss franc weakness. But if the interest rate is left unchanged to 0.5%, it should give Swiss franc a strength. Then we have interest rate decision as well for Great Britain pound as well that same day. If it is left unchanged, Great Britain pound should be strong. If it is left changed, Great Britain pound should be weak. Okay, then we have the initial jobless claims, okay, for New York session. The initial jobless claims, now you see a figure higher than 224K, it is bad for dollar. If you see a figure lower than 224K, it is good for dollar. Then these jobless claims for week average is a derivative. Continuous jobless claim is a derivative. The most important one is initial jobless claim. Then exiting home sales has to do with sales of homes, okay? If you see a figure higher than minus 0.7%, it is good for dollar. Why a figure lower than that, it is bad for dollar. To wrap up the week on Friday, we have inflation rate over here for Japan. A higher figure than 4.2%, it is good for Japanese. In a lower figure is bad. Then we have consumer confidence for London. If we have a figure higher than minus 21, it is good for Great Britain pound. A lower figure is bad. Then retail sales, the same thing as we explained in euro and also in dollar. If you see a figure higher than 4%, it is good for card. A lower figure, it is bad. Every other thing applies. So thank you so much for watching to this point. I hope that you guys follow our community, subscribe, and share this content. And I wish you a profitable trading week.